One of the things that's very important is to see a money flow. This is what the CM basically judges everything by: the ease of movement and money flow. This is what we call wyckoff structure of how the market actually works. The composite name is just a name that is the mind of the market itself. So the mind of the market is bearish and the mind of the market is bullish, and it's controlled by the CM. Then obviously we don't want to buck that trend. We want to go along with the flow of the market happening. Okay. So several weeks ago, I did a webinar for members, and one of the things I did with member-wise that as far as that goes is that now you get to the point to where you want to know where that money flow is happening, and with the end of the year going on, and with the economy around the world getting worse and worse, and I explained in the video that they don't want people to borrow, but they don't want people to default. And we went over that in the last video. And here's the problem with the markets. Here is the ICE support area markets. So this is the bottom market. So we broke through the bottom of the bond market. Okay? We broke through the bottom of the bond market. Well, that's significant because it's a daily basis. That's significant because it shows the market's ability to break, right? To ease the movement to the downside. Okay? So the market does not look like it's under accumulation phase. It may be oversold in a sense, but it's not definitely an accumulation phase. If I go to the weekly chart, the market looks like there's support, but still is very weak. Okay, so I want to focus on this because of the creek area wise. Okay, here is the situation. Here is the situation that we see it is that we have a market that breaks. The market breaks, and the market is a situation where things are getting to turn around the world. And we keep interest rates high here because we don't want people to borrow to default. And that's why, even though we should be at low interest rates, we're hiring the rest of the world to attract money, but we don't want to be too low because we don't want people to default. They want a certain amount of people to default, but not a lot of people, right? They get about 3% failure rate of people to make money. So this is a bottom market, bottom is bearish. I get to the stock market. Now, this traditionally is a more bullish month because retail sales get extracted out to like October now. This is a stock market. They're a stock market. And you're struggling around this bar here, the supply bar or selling bar there. So you got some overhead resistance, and the market could easily make new highs, but you can easily see the market have some type of weakness here. So you're running into that as far as that goes. Okay, so the thing is that I don't understand that what is actually happening because, well, I know it's happening, that we could go either way. So you're at a point to where the bond market get above the creek area again and head back up in that range, and it'll start making new highs. Or do the bond market stay weak and it puts pressure on stocks to the downside because higher interest rates cause higher cost to borrow, the problem with the market, the stock market. So one of the things that's important, that if you look at the various different stocks and what the leaders are stock and what the non-leaders are, you'll find something very interesting. Okay, I haven't brought this up in a while, but I'll bring it up now because it's pretty glaring. Okay, Walmart is the cheap store relatively. Obviously, Walmart is something in which it's the cheapest of the stores that people will buy from. Okay, because there's really nothing overall store that gives people that they can afford, right? So Walmart, you see, is at a high. Okay, and we'll see that Walmart at a particular high, right? And that makes sense because in an economy that's doing poorly, people can't afford it, or more people going there, they're going to go and shop to a lesser store quality-wise than they are, like, say, make a Macy's or a high-end store. Okay? So, so that is at a new high. That makes a lot of sense. So if everything is going well, the middle class and high end are doing well too. But when you get in an economy that's doing poorly, the low end does well. You still got the wealthy making money. So the wealthy make money, and those stocks, like a Tiffany Corporation or these large companies, they do well as well because they're going to buy expensive gifts because they profit. But the middle class gets squeezed. So Walmart being a lower end class instead of store, okay? The one that's more of a middle class is a Target. I don't know if people out of the country know Target, but you can research them and look them up. Maybe Walmart don't have either. I don't know. But Target is probably considered like the middle class store. Okay, so let's go to Target stock. Target stock is way under their all-time highs. And we'll see that the stock has basically gone one half of its value from its highs. Oh, it has gone one half, right? Look at this. Okay, Walmart is coming from 180 down to 90. So it's lost 50% of its value over the last several years. So if you own the stock this year or last couple years, right? If you own the stock basically in um, all year, you are losing money in Target stock. In a market that's basically been higher all year, you're losing money. And that's the problem with a lot of stocks. They're not ready to mark up, and they're bearish from the standpoint of they're well off their highs. So the anticipation of this slowdown, whatever, is shown by the CM in selling into the strength. This is why I'm kind of negative to the stock market, because stocks that should be doing okay, a middle class stock doing okay in a middle class middle class environment where you have more middle class people, those stocks doing badly, it pushes the middle class down to the lower class, pushing the Walmart, and you can see that by the stock. Now, the stock market is a very bad representation of the economy because you could have AI stocks and you could have Apples in the world. You could have all these companies that maybe are AI and not AI that are doing well. And if you own them, that's great. Okay. If you don't own them, or you own them as only a portion of your portfolio, then your portfolio is probably down for the year. Well, a down stock market when people are retiring and need money, an economy and interest are fairly high, and people are eroding prices, makes a very bad situation. And I think that's how the CM looks at that. So you can always see, oh, the Dow's making new highs or the Dow's near its highs, but the secondary stocks, like the targets of the world, they're not in the Dow, for example, are doing poorly. So when you have an economy that's weak, the low end stocks do well, the middle class do poor, and the high end do okay. And that's exactly what you're seeing now. Now, this market can break 10, 15%, which I think it will, based upon that. And I think that because of it's going to go back to value of pricing. The prices are not going to come down. Things are only going up, and people that are falling behind are going to fall back behind more. And the inability to borrow squeezes up the economy. And I think you're going into that type of situation now. It's just taking time to go through the system. They talk about this for years, but just like .com, it takes years to go through the system until enough people actually get hurt with that stuff. This is the biggest problem in the market that happens. This is the biggest problem in the market that happens. So it's important to note when I did that video 3 weeks ago, I anticipated it. I still anticipate that. Now, what will make the market bullish? I don't know. It's being held up by the AI stocks, but we don't know what those valuable stocks are. If those stocks over the next couple months report earnings that aren't as good, or the big boys do well, but the rest of them don't do well, that will hurt the market as well too, because they're not going to be able to keep the whole market up in general. Because people are going to dump stock in general. Even if they own those stocks, they'll lighten up on them. We've seen Bitcoin break, $60,000 from its highs. Okay, we've seen it from 125 down to 80,000. So we're seeing the selling of assets into it. Now, gold and silver have become up because that's where to put your money instead of Bitcoin. So this is a very important aspect, a very critical aspect. So the question is, do you buy a stock today, anticipation that this is a low, or you buy the stock, or you wait for the market to tell you what the stock's going to happen. Wait for the market to get an announcement. Wait for, direction wise. Even if the market skyrockets from here, you'll still be able to buy that market. But if the market, but it looks like the market is anticipating bad news or news that may not be as bullish as you think. What do I mean? The market may anticipate a half a point cut, they get a quarter point cut. Even though they cut, it's disappointing. And the market is trading on a negative tone, even though so many stocks have been making are near their highs. Most of the stocks I show you are like Target, have well off their highs. So there's a decoupling going on in the market, and it clearly shows you the struggles of the market in general. That's why. That's why. So that is really, 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 really important. Okay, that is really, 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 really important. And the point is that in the long run, what ends up happening is that we see the market overall. We see the market overall at a point to where we have the markets decoupling from one another, and that sometimes causes the long rotation because the middle class are eventually going to sell their stock way higher, lower than where the market's at, and that causes a very major problem to the market. So, in the long run, you got to be very cautious of the markets. Wait for what they say today, and then go. I don't know what they're anticipating today. To be honest with you, I try not to. But the market is trading. The bond market trading near its lows. The stocks trading as high because they're being held up by the AI. But the bond market is really reflective on the economy because that's what they do. Okay, that's what they do. And since the bond market is relatively weak, it got under this little support area, right? We talked about. And that's a market that has a short covering rally. This market should have held this area here for a retest up to here and make new highs. It did not. It failed. And now the market has a major issue for the market. Unless the market rallies from here, that 112 area, 3 points in the bond market, as I showed you in the chart, is a reality to happen. So it just shows you how you can look at various different. That's what I've been doing the last weeks with you guys, is looking at markets, trying to determine where they're going. And since the market's not improved overall, the market's telling you what I'm telling you, at least from the standpoint of how it's traded. Okay, so that's really something that's really, really important. Okay, so that is something that really, really, really need to look at market-wise, action-wise. So we read the tape, okay, because we don't anticipate what they're doing fundamentally-wise, even though fundamentally is baked in the cake. But from a wyckoff standpoint, we're looking at the market, the strong hands, large forces, and the mindset of CM of putting it together, and they're showing a weak picture for stocks and the bond market interest rates to stay fairly high, discouraging buying so people don't default. So I hope you enjoyed this little presentation of the market. Let's go into 2026 hopeful, but maybe the market just corrects and then heads back up the rest of the year. I'm not sure. You also have a situation where you get the last 2 years of a presidency, which tend to be a lame duck, which a lot of things don't get done. And the market being stagnant itself could cause a little problem. So keep that in mind. We'll update this as we have to. Thank you.